ado, we're going to introduce Jade and his panel. We're going to be talking about bridging access to services for crypto companies. This one is really important because financial services are definitely an area where we're all struggling as an industry. Access to banking, access to insurance products. So we're going to be having a really engaging conversation. Oh, sorry, excuse me. So Jade, if you'd like to come up with your panel. Jade is our VP of the Canadian Blockchain Consortium. We've been working together now for, since 2018-ish? One of the most amazing people I know. He's definitely an entrepreneur, one of the most passionate advocates for startups. He's so invested in our tech ecosystem in Alberta. He's exited a few businesses. Ask him about his passionate love of hot dogs if you get a chance to. He really, really loves hot dogs. So Jade, thank you so much. I'm going to leave it to you to introduce your panel.
Awesome. Excellent. Thank you, Kalea. Thank you, everybody, for being here. I was a last-minute pinch hitter. I had somebody bail last night, so it's a good thing. I'm a little bit of an introvert, so I'm very uncomfortable up here. So just to let you guys know that. But I'm extremely excited about our panel. It's going to be a great discussion. I always believe less of me, more of them is going to be good. So first of all, here we have Matthew Cito, who's the head of institutional sales for Aquanow. Pamela Draper, president and CEO of Patino Payments. Eric Richmond, the president of CoinSquare, and Amin Sohi, head of digital product payments and rewards, and also the chair of our Access to Banking Committee at the Blockchain Consortium. She's with Scotiabank. Thank you all for being here and sharing your knowledge today. So we're going to give a brief 20, 30-second introduction. Each will let them introduce themselves. So we'll just start here, and we'll start with you, Matthew.
Oh, okay. Hi, everybody. My name is Matt Cito. I am head of institutional sales at Aquanow, and I'll introduce Aquanow as well.
Sure, quickly.
Okay, so Aquanow is an infrastructure and liquidity provider based in Canada. We are about 110 people now, about half of that being engineers. We have a number of verticals that we serve, being either retail platforms who are B2B only. Sorry, I should say that first. B2B only, retail platforms. We have remittance and payments and corporate treasury that we would be the back end for. My background is actually traditional finance. I started off as an algo developer at RBC Capital Markets and spent 15 years there. I spent the latter years in Europe, where I co-ran the cash equities execution desk, and I spent a lot of time also in the regulatory side with a big regulatory change called MiFID II. So I do both the technical, the sales, and the regulatory side.
Pamela Draper, I'm president and CEO of Patino Payments. Patino is part of the digital commerce group of companies, which is comprised of Digital Commerce Bank, a Schedule I licensed Canadian bank here in Canada, Digital Commerce Payments, and Patino Payments make up the payments vertical within that group. And we run a cryptocurrency exchange which is regulated by the Securities Commission. It's called BitBo, which we recently sold to the Wonderfy group of companies. Similar to Matt, prior to joining this group of companies and co-founding these businesses, I was in traditional finance. I spent about 15 years in investment banking at first CIBC and then BMO Capital Markets here in Toronto. So straddling both sides of the traditional and real world.
Hey everyone, Eric Richmond, president of CoinSquare. CoinSquare is, for those who don't know, probably one of the oldest domestic Canadian crypto exchanges. It is CIRO regulated, and still today the only crypto native CIRO regulated dealer in Canada. CIRO equivalent to, or they changed their name from CIRO to CIRO from IROC. And we are part of the Wonderfy family as well. Earlier this year, we completed a transaction with them. Wonderfy, for those who don't know, it's listed on the TSX under ticker WNDR. And now we get to work a little sort of with them. My background, I was also the co-founder of Tetra Trust Company, which I'm sure you'll hear about a little later today. And prior to that, I was also a securities lawyer at Blake's, so the OSLR lawyers in the room, don't yell at me.
Hi everyone, this is Amin Sohi. I just want to make sure I don't run short of breath on being on the 63rd floor, so high. I head the digital payments and loyalty product teams at Scotiabank. We don't have a very elaborate blockchain practice, but a small one, just a few people across product and engineering. We're exploring a few use cases for cross-border to sort of leverage the technology, as well as I think alongside RBC and Scotia sort of leading the consortium to consult the Bank of Canada on CBDC, so involved there as well. My background is engineering, educational background is engineering and MBA, and I've spent many years in financial services, prominently in payments and technology space. Nice to be here.
Excellent, excellent. So we're going to get right into the questions. So the first question is going to be, there's major differences between the cryptocurrency and traditional markets. So specifically, how do these differences impact and what considerations should be made by service providers to meet the demands of this rapidly developing sector? Pamela, why don't we start with you?
Sure. I mean, in certain ways, they facilitate a lot of the same purposes. So they're facilitating payments or facilitating trade, similar to a stock or a bond. But then in other ways, they're completely different. The technology is completely different. When they started out, the Bitcoin white paper was introduced in and around the great financial crisis to be what the founders proposed as a better alternative to the traditional financial system, whereby they weren't beholden to central banks that could continually print money ad nauseum until the end of time. And it's interesting because since 2008, I think we've only seen central banks continue to print money. I think that's very evident in today's environment. It's very evident throughout both the financial crisis and its recovery, but then also COVID and its recovery. So I think you're seeing two parallel systems. And from a service provider perspective, which is where we sit, you need to adapt to the nuances of the technology and the use cases of the space, but then also integrate it within the existing system. Personally, I don't think that it exists on its own and one is necessarily better than the other. I think the two have to coexist together and together make up a robust financial system that serves all the use cases that we would hope for it to do.
Anybody else? Elaborate there.
I can probably jump
That
in.
can't be all of it.
So I think from when you see blockchain coming into the consumer finance space, I think that there the distinction becomes very much needed. Early days, I think regulators with Canadian securities regulation, they've done a good job to talk about, hey, additional disclosures that need to be there. From a consumer investment perspective, there needs to be limits. Certain restrictions on futures and margins should not be used. So I think those are rightfully in the place. And I think beyond that, the depending upon, even from a regulation perspective, a banking perspective, we look at it, it's not like the blockchain could be powering it, but what's really the use cases? And the use cases are pretty developed when it comes to either its investment securities or its money movement. So the typical AML, KYC rules should be applied, and those standards should be held. So I think those are absolutely fair.
Yeah, I think there's been a little bit of a shift, and you see this in a little bit of for the ones who are familiar with the DeFi IOSCO paper. There's sort of like this conclusion where it's like everything is the same as traditional markets, and we're just going to regulate the same. And I think there's been a little bit of a shift, like to that end of the spectrum. I think at the end of the day, I think people in this room really understand the technology is different. There are unique characteristics that need to be considered to ensure that this legislation that was crafted in the 30s doesn't stifle the innovation of the industry, but there is balance there. There's the AML stuff, the limit stuff. It is a nascent new technology. People are learning. Some people are just trading based on FUD or FOMO, and so it is important to protect people. And so there are a lot of similarities from if you go back to certain asset classes in the security sector that are similar today, and you see that playing out now. And hopefully we're at a phase now in the industry's life cycle that some of those bad actors have been flushed out, and the regulation has sort of caught up to at least a part of the technology and some of the riskiest areas to provide retail investors protection that they need.
And I think what I'd add to that is I'm happy that the Canadian regulators have at least put something out, and they're asking for platforms to take a pre-registration undertaking. I think that's a really positive step. I think the Americans, it's not as clear as how they're asking for rules and they're not really getting them. I think the other thing I would add is that really what we heard from Kyle earlier was really a great way to start the conversation, and actually. It's exactly what we need, right? We need the banks to hear what the other use cases are. When you sit only in Canada, and when you are a Canadian bank, or you're a Canadian, if you've lived your whole life in Canada, you don't necessarily understand the difficulty that the rest of the world has with doing some basic things that we can do. Now, having lived in Europe, I know the other side of that as well. I had to pay my mover moving back from London. I literally could not pay my mover money because there's no way of, I was in London, you just can't do it. You have to do it little bits at a time, and at the time, I wasn't going to do it $2,000-3,000 at a time. He wasn't really concerned. He told me he had all my stuff, so he wasn't concerned about the actual payment. He said, just come back and pay me, walk into the branch then. So there's two sides of it, right? We feel safe, but we don't have the open banking side of things. We don't have some of the innovations that we've seen in Europe. So at least we have a path forward, or the beginnings of a path, and see where it goes.
No, it's good. I mean, we see this at the consortium, right? Where the regulators are engaging with us. We're having these discussions. We're having discussions with the banks, so that's very positive. But I mean, banking and insurance are often highlighted as two industries that are hesitated to engage in crypto. So why do you think this might be? Why don't we start with you, Amreen?
Yeah. I'm the only one representing this area. Yes, absolutely. So I think two things I'd say. One, generally, it's beyond blockchain. When we look at like fintechs or startups in the money providing or consumer finance space, generally as a whole sector, the banks are not very bullish from an access to banking perspective on this area, specifically for sort of compliance reasons. So, and let me elaborate there. There are a lot of standards, rightfully so, in place for these sectors. And as a banking provider, the options the banks have is either they customize their due diligence for each and every, because they're all nuanced, each of these companies that they bank, because banks are then held liable for, hey, if somebody you bank is not holding to the standards, you are not on site as well, right? So I think there's that, because of that liability, unless this sector overall significantly grows in prominence and size, then it would make it attractive enough for, I'll say, at least the big banks to either set up some customized processes to review the compliance or whatever. Otherwise, you're just left to lean on these companies' compliance, which is obviously, as you can guess, bank doesn't feel comfortable with. So I think that's, one of the big barriers. So it's not really specific to blockchain-enabled companies, just generally money-providing consumer finance companies. Having said that, actually very recently I met a friend, ex-Cap One colleague, and he's into a business of like data centers and data consolidation of multiple blockchains and providing that as a back-end service to anybody who wants to use. So it's really not consumer finance, it's not one of those front-end regulated industries, but he also had a very tough time getting access to banking. So I think there's definitely a segment of blockchain-enabled companies, I'll say quick win, that through awareness and education, the banks can actually bank them well. Just as an example, their revenue source was coming directly from the blockchain, so they didn't really have invoices to show. And so whenever the volumes of the blockchain usage increased, they saw a spike in the revenues. And the bank was like, hey, we don't understand why this is happening. We don't have any invoices to support it. And so they shy away from banking such areas. So I think definitely awareness and education for these areas for the banks would go a long way.
I think there's a couple interesting points. I have so much to say on this topic. I'm sure it does too. One of the points that you made, and it's true, is that the banks are hesitant to support smaller industries and smaller companies. But it's like, what comes first, the chicken or the egg? Yeah. If you stifle banking for fintechs and smaller companies, they can't grow to become bigger companies, or you make it a lot more difficult for them to grow. So I think that as a country, we should be more supportive of those smaller industries, and banking is a huge part of that, particularly the big five, because in Canada we do have these oligopolies in banking and telecom and airlines. So I think overall, for the good of the population, it would be better to not stifle these smaller industries and somehow find a way to help them, if it's compliance that they need, find a way to work with them to put regimes in place so that the banks can be comfortable, so that we're not stifling smaller industries, not stifling innovation, and they can to grow to be larger industries, to Matt's point, the way they are in Europe, and we can have a more robust fintech banking and payment system in Canada. We are grossly behind on an international scale in terms of the way that money moves in Canada. So it's definitely needed. And I think the other point that you made was on regulation, and regulation holds these companies to a certain standard. All of these companies are regulated by FINTRAC and have to report to FINTRAC. Some of them are regulated by IROC and the Securities Commission. So some of them are more heavily regulated than certain parts of different big five banks. Of course, across the bank, they're beholden to all of those separate regulatory bodies. But Eric's company is beholden to IROC, the Securities Commission, FINTRAC, everything all in one, and still it's challenging to get banking. So I think the argument that banks provide to not want to play in that space when companies like Eric's and like BitBo was regulated with the Securities Commissions and with FINTRAC, it's really hard to make the argument that you can't support them. BitBo couldn't get banking with any of the big five banks, despite being regulated by the Securities Commissions, despite being regulated by FINTRAC, despite having a robust compliance team with traditional TradFi banking background. Anyway, I'll stop now.
No, but and I just want to, and Pam's business and group of companies has obviously provided a very added service to this industry, and I think so. Thank you for that. And I think at the end of the day, these big five, our industry is not big enough for the big five banks to care. Unfortunately, maybe 21 at a point, but not right now. And at the end of the day, when it gets to the people at the top of the bank, who are ultimately the risk people, the risk teams, the ML teams, compliance teams, they're not going to lose their jobs by turning away this business right now until we get to a sufficient size that really matters. And so that's where it's like, again, it comes back to the chicken and egg. How can the industry get there to actually be an impact, or does it need to be sort of political pressure? Because there's also mixed messaging coming from OSFI as the regulator of the banks in terms of what they're prepared to sort of be comfortable with for the banks. They haven't provided enough clarity for them. And so I think it's sort of a two-pronged approach. It's it's very important from an advocacy perspective to put the political pressure that's required so the banks can do what they need to do, because I think that's really where the push can come. And then hopefully as an industry we continue to grow to, and some of these big five banks, they're still in competition. One or two of them or a few of them will start wanting to provide banking services to the sector. And that will also bring down the insurance costs as well. I think the insurance costs are extremely high right now. That was sort of the other part of the question. And I think, clear regulation and, I don't think there's, all the insurance is provided in London today. There's none of the insurance companies in Canada are providing insurance for this space. And so it'd be important that, if we can broaden that competition, it would hopefully reduce rates. That's sort of my take on it.
I'd add a couple more things. We saw this in the marijuana business as well, where there's the we have a very aggressive SEC, and if you're a Canadian bank and you have capital markets in the US and you have a subsidiary that falls under the SEC, then what ends up happening is you don't really want to put anything that you have at risk. You have a very big business with big ROI, and so the Canadian banks, I don't think they did a single marijuana banking deal, and I don't think they were allowed to trade stocks even until the point that they entered the index, right? So that's really, really late. That's you're a big company by the time you join the index. So that's a major problem. And the other aspect is why we need smaller banks to be able to service. Right, this is the whole thing about the regional banking. Not every bank can bank with JP Morgan or with the biggest banks. You need these smaller banks, so you need this great ecosystem that's going to allow you to actually have more bespoke service. And the other thing I would say is that, the nature of the business is also not necessarily something that they understand. Because they don't understand the digital side as much, they sometimes see one-way movement of flows, and banks don't really like one way, they like two ways. They also like to know where it's going. So they see where it comes from, they see where it goes, and that is normal to them. They've been trucking money around for many, many years. They see it leave their ecosystem in something they don't understand, and all of a sudden, all the red flags start up.
Yeah, well, I mean,
Can I make one comment too? So I think I love how Ed explained the balancing act here, so thanks for that, also defending the banking space. I think a call out to this consortium, so Canadian Blockchain Consortium, I think if we think about solutioning of this problem, a little bit of self-regulation within the industry by the players who understand it very well, I think could go a long way, maybe not to bring the big banks into the picture right away, but at least even the smaller ones. There is ATP Financial as well in the consortium, and they mentioned that how they have to, they are in this space, but for every company, they have like custom reviews, etc. So if the industry within themselves can hold themselves to certain standards, which Canadian Blockchain Consortium is trying to get to, I think that would also help solve, or at least get us a little bit started in this space.
Yes, baby steps, and I mean even on the insurance side of things, hopefully in the near future here, the consortium is going to be able to help with that. So a lot of positive things. But Eric, you mentioned that they just don't care. Well, how are we going to get them to care? Like what are we going to have to change? What are we going to have to do to get the TradFi institutions on board?
Well, I was at BMO when we did the first cannabis deal, which was Canopy Growth, and BMO cared at that point, and they were the first of the big five. Before that, Canaccord did all of the pot business. But what got us to care at that point was publicly traded company, M&A opportunities, and public financing opportunities. So basically revenue that could be generated for the bank. Which basically speaks to Eric's point. You have to be big enough and of a certain size that it's meaningful to the bank's existence, and then they start to care.
Good point.
I think also that not that we should be driven necessarily by crypto markets, but they also are they all live in a data-driven world, so they see money leaving their ecosystem. So that's the other aspect, that if they like to sit on money, that's their business. So if they see it leaving, they don't like that so much.
Well, and maybe one more point just in defense of the banks, because I've maybe been a bit harsh. I think that also last year when everything was running up, the banks were actually kind of getting excited. And some of them were actually starting to talk to us, be like, you know what, we think we're ready to dip our toe in. And then things like FTX blowing up happens, and things like Binance being charged happen. So the industry has, in certain ways, done itself a disservice, because as they were almost there, and the people probably inside the bank that were like, you know what, FTX is a legitimate business, that we should get behind some of these companies, the ones that are being good, and then the ones that they think they're being good blow up, that kind of sets everyone back a bit too.
Yeah.
No, I know the question was originally to me, but I don't have anything really much to add to what Pam and Matt shared. So,
Amreen, how about your point of view?
I'd say I think everything Pamela, I think that's a great point. I can also vouch for that. I think these sort of industry level setbacks do hold up and make the bank then double think. So in addition to that, when the whole Ukraine-Russia thing happened, there was embargoes on money movement there, and then crypto was the area that money was going, right? And so then obviously, top of the house, there's obviously an education element of, that's not all blockchain, but they're like, hey, wrong things are being done in this space as well. So again, I think to Pamela's point, those setbacks do impact. That's the reality within the banking space.
I think those are very valid points. Like sometimes we just want somebody to blame for some of our own internal mistakes that go on in the crypto industry. So considering the impact of leading blockchain hubs on innovation and economic progress worldwide, what potential advantages could robust blockchain hub offer to Canada's economy and technological advancement? Who wants to touch that one first? Anybody?
I feel very strongly about good quality jobs in Canada. So I think I'll start there. I think my might be hinging into political territories here now with my viewpoints, but I definitely feel this is an industry which will grow. I passionately believe in that, and so building that talent pool in Canada will help bring that good quality of jobs that we desperately need as a country. Second, I feel, I think somebody in the panel mentioned, when you think about in payments, real-time payments in open banking, in finance, Canada is way behind. Most OECD countries, they're already there, they're mature in this space. So I actually feel that blockchain might be that one thing, if we can do great, helps us to leapfrog all the delays that have happened in these areas, and actually show the way to the world on what more can be done with decentralized finance and money movement. So I think it's got a good potential if we can harness it. And lastly is cross-border payment space. everyone's delving into it in a small way. Again, to my comment around leapfrogging, cross-border payments is a universal globe. Every country is struggling with it. So if we as Canadians can think about and develop our understanding, develop some solutions there, I think that again puts us on the roadmap. So I think that's another space that blockchain and hopefully Canada, and it's very relevant to our space with immigrants, etc. So much money moving in and out of the country. From a retail perspective, I think it would be relevant even within Canada.
Yeah, no, I completely agree. I like that a lot, actually. The leapfrogging effect, like, yeah, we are behind on open banking. Let's hopefully, I mean, in some ways in crypto, we obviously have regulatory clarity, but in other ways, we're also behind. Like, Canada, chain analysis guys in the room will correct me. I think it was like we're top 3 jurisdiction or so in crypto. We have a ton of people who have Ethereum was started here, Cosmos was sort of started here. A lot of these projects have sort of gone offshore or left the country. And you sort of have other platforms, looking at the country now and being like, let's not go there, which sort of, again, stifles the innovation in the industry. And so I do think there is an opportunity for Canada to sort of leapfrog other jurisdictions. Because the good thing about Canada is we can sit down with our regulators, our politicians in a room and have these conversations. And we can't, because there's political pressure on them. It's a little easier to do that in Canada than in so like in the US as an example. And so I do think there is an opportunity, from a leapfrogging perspective. I like that a lot. I don't know for the ones who are familiar with M-Pesa in Kenya, but that's a perfect example. I was in Kenya, I don't know, 6 years or 7 years ago. And you're like, oh, you would think they can't figure out their banking, right? But that's not true. You can text anyone money in seconds and get money from any machine there in seconds. It's really incredible. And it's stuff like that we could bring to this to Canada. And so I think there is a big opportunity. I think as long as we can ensure that, I actually don't really think it's necessarily the regulators right now that are. The regulators they have to apply the rules that are given to them. So at the end of the day, I still truly believe both at the federal and provincial levels is where the sort of pressure needs to be exerted so they can focus on this space, which frankly, they got a lot on their plate right now dealing with all these other industries that are distracting them. So the more we can do there, I think will be better.
Yeah, I think leapfrogging, but I also think keeping pace with the rest of the world. I truly believe, like I said in the beginning, that the appropriate system is one that is TradFi or a centralized system combined with DeFi and a decentralized system, and the two pieces need to coexist together in order to provide the consumers and the citizens of the country with the best overall financial ecosystem. Other areas in the world are doing that, so if we don't do that, then we do lose kind of ground in that regard.
But for me, the jobs are so important. I think that when you look at what Silicon Valley, California, all the VC money that's there and the incredible things that were built over the internet era, Canada didn't see as much of that, and I think we are known as being more conservative about things. But we have great tools. We have excellent entrepreneurs, excellent engineers, and we want to, as much as possible, keep them here and innovating and building that ecosystem, which is going to require both sides, the big banks, the regulators on side. It's going to require smaller companies, and a real kudos to entrepreneurs and innovators in the room. This is what it's all about, right?
Well, we love entrepreneurs. No, and I mean, we see it. I mean, many of you people in this room have sat in. The regulators are open to it. We've had discussions with them. They're there. They're thing I love about it. They're not looking for their YouTube moment, unlike it seems like the SEC or anybody down south. Like they want to talk. And they are there. So I guess when we're here, we're going to talk about collaboration between TradFi and the crypto sector. So I guess to move this forward, how are we going to open the communication even more to make these efforts come together?
I think we just need to keep at it. I think keeping the dialogue open and keep talking to the big banks, keep talking to the regulators, keep trying to bring them in. I know when we were on the BIPO side, we wouldn't give up that dialogue with the banks. It was never a hard no. It was sort of more of a not now, and I do kind of really believe that eventually we'll get to the point, particularly as regulation continues to advance and there's more platforms like Eric where they are zero regulated, but also you build up that trust. There's more time in between some of those blow-ups or some of those criminal charges that are imparted on some of the larger platforms. And then regulatory clarity in the US, I think, helps a lot. Because to your point on Canada's, a lot of businesses, banks, et cetera, in Canada are holding off on that because you have that element of if you touch the US, then you're potentially in trouble, and no one's willing to risk that. We're actually relatively fortunate here in that we had a fairly well-defined regulatory environment for cryptocurrency trading platforms years ahead of the US. And they're just sort of finally getting there now, but I think when they actually get there and there are clear rules, that will help us a lot here as well.
Yeah, I think continuing to have dialogue with the banks is really important. Like, as Pam alluded to, like having regulatory clarity right now, it like insanely reduces the risk profile for platforms for these players, the banks, so that it's like, okay, well, the risk is lower than if than the services and the revenue we can provide them. They can be more attuned to providing banking services. And at the end of the day, like, I think there's value that both our industry and the traditional finance industry, the banks in particular, like can provide each other. And so, like we, unfortunately, as much as we want to debank ourselves, we need the banks. So, anyone in the room who likes to say like "F the banks" or whatever, like let's not do that. And so yeah, it's important to continue to have that dialogue, continue to explain the benefits of blockchain technology. Like, even the services like, I'm sure we've talked about this at length, like, the chain analysis is that where the money is going, like that insanely reduces the risk profile of our space. And unfortunately, they are still looking at the headlines where like Wall Street Journal posts that like 95% of funds go to Hamas or something, whatever that crazy thing was, which was wrong. But they don't look at the wrong part, the correction. They just look at the first article. And so yeah, having that dialogue is critically important, and I think we just got to continue to have it as an industry.
I think the only thing I'd add is there is a natural progression of education that's already happening within the big banks on this. So I think the blockchain industry can do that, but folks like myself who are sort of in the payments space, we understand what the operational inefficiencies are within the bank. We are trying to educate our C-suite on what potential this technology has. So I think naturally it's going to be those very painfully slow, I believe, because they're just so distracted with so many other things. There'll be a natural learning curve of the big banks to understand this enough to at least identify spaces where they can play an active role in supporting. And then two, I think like totally aligned, and I think what we should be through this education, partnering to continue to nudge our regulators to bring in regulations. Unfortunately or fortunately, the more regulated a space or clearly more defined it is, banks are more comfortable entering into that. So I think it's important that one way or the other regulators make a call also, and so I think if banks and this industry can join hands to ensure those dialogues are happening at the government level, that can go along.
Yeah, I'll add a little bit to that. This is so important, and cooperation between innovators and the big banks and the ecosystem. Having worked at a big bank, I was surprised at the problems that small companies had. Things just showed up. Things just worked. I came from the equities world, right? So everything's centrally cleared. You don't have to worry about settlement. You don't have to worry about anything like that. There's teams of people that handle these things. But that's not necessarily how the world works. And there's just so much more to it. And also having been in that seat, I am now having been in a much smaller company, I'm amazed at the amazing things that small, nimble companies can solve. And I saw during my earlier times at the bank, it was cloud. Like, we weren't allowed to touch cloud. That was a big no-no. And then all of a sudden you look now, everything is cloud. And I remember one of the last things, I remember the big edict, everything has to be in cloud, right? You saw this massive shift, and smaller companies who didn't have those rules were able to build not only all the social media things that we see, or a lot of that, but also financial services were able to build things that the banks could not and catch up really quickly, so the hurdles all fell down. So what I would encourage in events like this is we see bank folks here, and that's amazing. And if you're on the innovator side or entrepreneurial side, talk to the big banks and you need that cross-pollination, because other than being here, and thank you for all those banks here, you're not going to see it. You're in your own kind of ecosystem bubble.
So my takeaway from that quick question is painfully slow, but moving in the right direction?
Yep.
Perfect. Well, that's the end of our questions. So we do have some Q&A here for about 7 minutes. So if anybody has a question, put up your hand. And well, we got back row. Shocking. That is.
Hey, okay, hold on.
No Shorzy jokes.
We had a good Shorzy session last night. Yeah, thanks for the discussion, guys. Great discussion, great questions. I'm curious, a little bit of a meta question off of this time and patience thing. I agree with you fully. You know, this is new technology, new industry. You know, lots of entrenched interest. Things take time to change. I think we all get that. I'm curious on your thoughts. I don't know who wants to grab this one, but anyone who wants to jump in on just the demographics, the people in these positions, the 62-year-old white male executive in a bank. Like, as these people retire and the new crop of younger folks come into these roles, I'm curious on the human factor, the decision makers that ultimately things don't change unless people change, right? So I'm curious about your thoughts on that, what you've seen directly working in these organizations and the people in those positions of power.
I mean, of course, like at the more junior levels, there's a lot of appreciation for this and what we're doing, and there's a lot of support there. But that sentiment has started to change, started to shift. I mean, there's obviously the few executives that just don't care. I don't think we'll probably change their views until something really slaps them in front of the face. But that sentiment is starting to change. It just comes back to the constant dialogue with these folks and the consistent, like, you know, different touch points. At the end of the day, like, to your point, which I appreciate a lot and I agree with, is there's a human element to all of this, and so it's like if you're meeting with them face to face, talking to them, and having different touch points from the bank, like, hey, I talked about X, Y, and Z, and then that gets filtered up to the top. That's where we can continue to get the support. And Joseph, I see you standing, so I don't know if that's the same question or a different question. Okay.
It's not only that somebody on the business side has to put their name on the, at RBC we call it the new business committee. They've got to put their name on that, but also the other operations and segments, they have to change. They have to accept it as well. If the only way you get something over the line is not only if that person, you can have a champion, but if the market risk people aren't okay with it, or if the legal people aren't okay with it. And I went through a big new business committee in Europe for an ETF desk. I realized the most powerful people were the tax people. No. Click. What? No. Click. Right? Like, you couldn't argue. So it's not only the business side. You also have to change the functions, and you have to get a lot of people over the line. And unfortunately, unless you start seeing turnover, but maybe actually as you start seeing new technology, people actually will say, oh, well, actually, I don't really want to be involved in this aspect anymore. Or we are seeing a little bit of this, that people don't want to go back to the office, so they actually opt for early retirement, so maybe that'll help us.
Just a couple of things I'll add. So one, I don't necessarily feel it's like a old school white male versus sort of new school thinking. I think P&L, or like profit and loss in our industry that we talk a lot about, and PR, both of them are also very important to the banks. They're big banks, their reputation is a big thing as well. So I'll take an example, like sustainability, ESG, not a big P&L one, but it's a big PR thing. So it still is getting a lot of attention within the banks. So I'll say, like, as an industry, either if we can make a tick mark on P&L or PR, I think that again will get attention, no matter if it's a white male or a brown woman at the top. And then the second, I think what's playing a role, a very positive role, is if not in Canada, look at JP Morgan, a very big bank through Onyx, like they've built a whole business out of it. It's making real money for the bank now. that makes other people in Canada, like big banks in Canada, look and say, hey, big bank, super regulated, but is still able to do a lot with this technology. So I think those examples are also changing the mind shift, even for the white male on the top. So yeah, I think those are a couple of important questions.
One more question.
Mine's going to be a bit challenging. Joseph Fuso, KYC 2020, ex-bank employee, ex-MSB, ex-crypto Camlo, still compliance for payment services and other things. I'm going to take a different angle, and you guys are talking about how the banks need to start waking up and taking on business and stuff like that, but I'm looking at it from both sides when I see it, and I question why banks would take on the industry when we still deal with entities like Binance who failed to file 100,000 SARs, who plead guilty to money laundering and terrorist financing, to plead guilty to child sexual exploitation, sending transactions and stuff like that. And we as an industry are sending to those places like Binance and the others. How can the bankers feel safe if we continue to do that as an industry?
I agree, and that was kind of to my point where we've hurt ourselves as an industry with some of these institutions that haven't behaved appropriately over time. But I also think that when you look at the Canadian landscape, it is much more comprised of businesses like WonderFi who have held themselves to the highest standards since inception and tried everything that they could do to prevent that type of activity. And a lot of the bad actors, Binance included, have self-selected out of the region because they couldn't comply with Canadian regulation or didn't want to comply with Canadian regulation. So I think the banks could probably look at Canada and the financing is actually a positive example to bank more businesses like Eric's. And when I look at the landscape, are more the businesses that remain than not.
Yeah, no, I agree. If you go back to like who's like if we're just talking about Canadian crypto trading platforms, like a lot of the bad actors are, I'll say they're out. Obviously, any retail investor can figure out ways on how to use those platforms at the end of the day, unfortunately. But a lot of them are much more difficult to access. There's obviously still the DeFi world and the non-custodial areas where, I think some of the things you're alluding to, Joseph, are still sort of available. But we are doing a better job. The regulators are focused on this, and they are trying to push those bad actors out of the space. And I think it's just important for us to continue as platforms like CoinSquare, BitBuy, the WonderFi Group, and others in the room. It's important for us to ensure that we are being compliant, we're being on side, and we're trying to stop that sort of activity.
Perfect. And we're going to have to end it there, but Matthew, Pam, Eric, and Maureen, thank you very much for everything you've done within CBC, for moving the industry forward and sharing your knowledge today. Thank you.